Trueflation. We just keep hitting new lows, man. It's it's getting kind of nuts. So Trueflation is now at 0.74. That's the lowest I have ever seen this. In fact, I guess if we look at this a couple days ago, it actually got to 0.68. Guys, remember this. When we started tracking Trueflation when it went live, we got as high as like 16% at the worst of 2022 in these calls. We've gone from 16% down to under 1. We are now like, this could actually move into deflation territory, right? That's crazy. That's crazy. The BLS is now reporting it's at 2.7%. We have a 2% delta between Trueflation, which is actually real data, and BLS, which is made up Fantasyland data. So the Fed is still making decisions based on this. I would think that if Kevin Warsh comes in, he's going to do things like take a more active look at Trueflation. So we'll see what happens there. So let's look at some positive news. Actually, let's skip on that. When will Bitcoin start a new bull cycle? Here's the things that we got to look at. Bitcoin must hold the 200-week simple moving average to see new investor flows turn positive. In fact, if we go to our chart, that'll be the only indicator that I'll use here. Let's go back to the monthly. Here we are. Yeah, so there's the 200. 200 is about at 57, let's call it 57, 58,000. So we need to hold that. Really need to hold that. We got close to it. Actually, that might actually be the exponential moving average. Let's take a look. Sideline capital must flow back into crypto. And I'll talk a little bit about something that, again, I feel like I do this every time. Hats off to Brett. Brett has been so far ahead of this. Only now are people starting to talk about tether dominance. Brett's been ringing that bell for like, what, a year and a half, 2 years now? So the dude is continuing to be Brett Cryptodamus, as we say, and way ahead of there. So big value to you guys for him being way ahead of this. So, and then we need more rate cuts from the Fed in 2026, which will bring risk on investors back to Bitcoin. So, and again, I'm not talking as much about altcoins because as Bitcoin goes, so goes alts. Alts are more important to talk about in bull runs. Bitcoin's more important to talk about in bears. So Bitcoin must hold above this line, the 200-week simple moving average. Historically, this wave acted as a magnet during deep drawdowns and a solid floor once selling pressure subsides. So if we take a look at this, in 2018, we held it after 2 retests. We held it during the COVID drop. We wicked underneath it. The only time in history it broke below that was in 2022. And it stayed under that for like months. In fact, that was the only time I'm aware of that this went underneath it. Well, we slightly ticked below it, maybe just a little bit in the end of 2023. So it would be nice to stay above this, right? That'd be quite nice. Now, one thing this means is that the moves up were so massive, and that caused the simple moving average to, be higher and higher, but the drawdowns were so steep, then that's why they met it, right? So we still had a huge run up comparatively, not as big as 2017, but much bigger run up this time, and a little bit lesser of a drawdown, which meant this went underwater. So the thing is, as these runs up get lesser and lesser and lesser, right? But the drawdowns continue being big, brutal. That means that this is going to kind of flatten out the slope, which means that it's more likely that we go underneath that. That's the downside, right? So in these, the run up was, just from $185 in 2015 to 20,000. It's going to take a huge, dip for that to meet here. And then same thing, we went under it this time because the run up wasn't as big and the drawdown was still pretty big. So unless that was it, we're probably going to go under that level, in my opinion. So Bitcoin's new investor flows must return. So another prerequisite is that we need new investors to come back in. You can see here from this chart, as of February, wallets tracking first time and short-term holders show roughly 2.7 billion in volumes, the highest since 2022. This is very, very small here. We need new investors to come back in a very big way, right? So anytime we've gone negative here, that's been near bottoms, like during the crash in mid 2021. And of course, during that final drop down in 2022, all the way across till we came back up out of that bottom. So current readings resemble post all-time high transitions in which marginal buyers exit and price is driven by internal rotation, not net inflows. So that's true. In prior cycles, sustained bullish reversals only emerged once new investor flows decisively flip back into the positive territory. So right now we're still underwater. So you can see that it only turned around once we went from red back into blue, basically from negative into positive, negative to positive, negative to positive. And then right here, we're pretty negative, right? In fact, this is pretty much on par, pretty close with that bottom in 2022 from just the sheer number of outflow for new investors. So it's looking, pretty deep into the bear thing, so right now. The same must happen this year for a strong bull case. And then here we go. I'll have a little bit more to say on this in the next slide, and then I'll turn it over to Brett. Sideline tether must flow back into crypto. So this is pretty interesting. So Tether's Tether's share of total market cap has risen in recent weeks to test a familiar 8.5 to 9% resistance zone. So the rising USD Tether dominance means investors are parking money in stablecoins and avoiding risk. Again, Brett has been ringing the bell on this for well over a year now. As you can see here, at least from 2021, we hit these levels. It went higher in 2022, 2023, right up there at the peak. And then we recently just hit the same peak again in 2026. Now, what I see is that this doesn't mean that this has to be the top or that this has to be the top. It means that every cycle, because there's more stablecoin value overall, people are using stablecoins more, and they take up more and more as a percentage of share of the overall crypto economy. If this holds true, then this just means that this time around, it doesn't mean that this 7 to 9% has to be a ceiling. In fact, Brett has been showing the crypto crash zone goes much higher than that. And so as more and more of the world's economy and the US dollars in existence move to Tether, which it doesn't have to just be Tether, but stablecoins in general. I mean, eventually stablecoins will exceed the value of all, crypto market cap because the entire world's dollar supply will come on chain. That's just going to happen. So it means that right now this could act as a short-term resistance, but I don't think it means this has to be the ceiling. So since November 2022, clear pullbacks from this 8 to 9% area have aligned with strong Bitcoin rebounds. One rejection followed a 76% rally over 140 days. Another preceded 169% gains over 180 days. Similar setup occurred from 2020 to 2022, when the key ceiling sat near 4.5 to 5.7%. So each time it's getting a little bit higher, though. So your Tether dominance broke above this range in May 2022, and Bitcoin then fell by 45%. That was at the very end, further reflecting the inverse correlation between the two. And then lastly, quantum fears must subside. Some note that 25% of Bitcoin addresses are already at risk if we had quantum computing come online, believing this is still a long way out from this being production ready. Several security-focused sources frame this as a threat that's still far off in the future. For example, in November 2025, cryptographer Blockstream CEO Adam Back, I actually met him at Bitcoin Nashville, pretty rad dude, said that Bitcoin faces no meaningful quantum threat for, quote, 20 to 40 years, adding that the network can be quantum ready well before that becomes a real problem. Keep in mind, this is a guy who has tens of billions of dollars worth of his own Bitcoin at stake. So he's not one to just make some dumb statement when he has a lot of money in the game. Bitcoin Optech also noted that near-term quantum risk would be concentrated in edge cases, such as reused addresses, rather than the entire network all at once. So start with fresh addresses. Don't reuse your same addresses. Doing just that, Coinbase and Strategy have launched quantum initiatives, bringing in experts and mapping out a roadmap for Bitcoin security upgrades, because they obviously have a lot of skin in the game here. We also need more Fed rate cuts to get this thing rocking and rolling again. I can skip the rest. And then Donald Trump may push the new Fed chair for 3 rate cuts in 2026, according to Lee Farage. The good thing about Kevin Warsh is that he understands that AI is a massive deflationary force, and that is massively more important than, for example, any kind of inflation that so far has not happened at all due to tariffs. So if he understands that, then he actually would cut rates because it's the right thing to do facing deflation. Now, last thing I've got, Bitcoin bottom is 60K. The answer might be in Tether's dominance chart. So just a little bit more on what Brett had been talking about forever. So Tether dominance tops have aligned with Bitcoin bottoms. Of course, we just hit that 5.8 to 9% range. Inverse relationship was especially clear in November 2022 when the Tether dominance peaked in the 8.5 to 9% zone as Bitcoin formed a multi-month bottom. So this actually did hit that, I guess, in 2022. We hit that during the last bear market peak. Just hit it now as well, but there is more Tether in the system. So, I think that it could go a little higher this time. As Tether dominance rolled over from that peak, Bitcoin climbed to above 31,000 by March, nearly doubling while stablecoin dominance trended lower. A similar pattern repeated in 23 and 24. Bitcoin gained nearly 200% a year after the dominance topped out. So we just need to see if it breaks through that to a higher level, then we're definitely in mega crash zone, as Brett has been talking about. So Bitcoin showing a familiar combo of weekly chart coincided with macro bottoms in the past. Specifically in February, Bitcoin's dominance, or weekly RSI, slipped below the oversold threshold of 30 At the same time, its price bounced after testing the 200-week simple moving average. So this is kind of interesting, these two things together. This combination, except for 2022, because we had FTX explode, we had BlockFi explode, we had all these things explode, Terra Luna explode, preceded multi-month price rebounds that included a 1,115% price rally in 2022 or 2020 and 2021, and 350% gains from 2018 to 2019, blah, 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 blah. So it's kind of interesting that those two things combined, the RSI hitting these super oversold conditions, in addition to Tether dominance hitting at the same time, marked a bottom. A little bit off here when we went under this in 2022, but we're right there again right now. In fact, if memory serves from this past week, I think RSI hitting the most oversold, this was, I think, the most or second most oversold in Bitcoin's history. So that's worth mentioning. When we have the most oversold in history, plus fear and greed at 5, plus Tether dominance at 8.5 to 9. I don't want to give you any like hopium/copium because I'm still bearish unless proven otherwise. But if there was going to be even a medium-term down bounce before the further downside to the bottom later this year, right around now would be the time to do it. Large Bitcoin holders or whales took advantage of the Bitcoin crash below 60 grand to accumulate about 40,000 Bitcoin. It's always nice. In a Monday note to clients, Bernstein analysts described the ongoing Bitcoin pullback as the weakest in history. Parentheses, my addition here, thus far. Doesn't mean it's over. And reiterated $150,000 Bitcoin target by the end of 2026. To me, that seems impossible. But, when things seem impossible, I don't know. Unless something happens and stocks start really rallying again, so on and so forth, it still looks pretty bearish to me. We've talked about trueflation. We've talked about, fear and greed on the altcoin side hit a new all-time low, as a matter of fact, since this has been tracked. And granted, this did not track since the previous bear market. So full disclosure, this only started in summer of 2023. So we didn't capture the last bear market. But so far, this is the most, down this has ever been. It hit 5 out of 100 on the, I guess it was that crash on the 5th and 6th. So that was the most it had ever been. I've covered Poly Market. I've talked about, last thing. I just thought this was, again, this is from last week. This is already passed. But boy, if you live through this, you can make it. Bitcoin crash triggers biggest one-day investor losses in history. It's one of those things where it's super frustrating to be on this side of it, but it's also those things where, on the way up, you're like, wow, today was a record day of gains. No one's ever had this in history with Bitcoin. So you kind of got to be here for it. Bitcoin plunged nearly 10% on the day to 64 grand, triggering 3.2 billion in realized losses as weak liquidity forced selling pressure. I think someone's marking up my screen somehow. Bitcoin's sharp sell-off saw a historic loss, taking thin liquidity and a $10,000 day drop, raising fears Bitcoin could revisit 38,000 before stabilizing. Of course, that was before we bounced up to 71, 72,000. So I just thought that was interesting that was like, you're witnessing history, unfortunately, now on the negative side. So it looks like we're back above 66. That's nice. But got a red day overall in the market. Hell, even I kind of showed this in the Retire Rich call. The last thing I will leave you with is just the fact that everything sold off so fast today. It makes me wonder what happened. So, for example, silver, gold, all this stuff at the same time, just nuked all at the same time. Copper, gold, all the things. So I'm not exactly sure what happened. Let me know in the comments or in the chat if you guys have any narrative of what happened on Twitter or whatever. But I think that's all we've got for you now. I'm still just kind of in wait and see mode. I'm hoping for the best, but preparing for the worst. So that's kind of where we're at.
Okay, thanks. I was clicking around to see if that was me drawing on your screen. I don't think it was, or maybe it was. All right, well, thanks. Great job unpacking all the news as usual, Mike. So, all right, well, I'll go ahead and share my screen. And I was clicking around. I couldn't find the catalyst. I think we're just losing, we're losing an important level and getting below a sell zone. So there is that. Details. Before we dive in everything else, at the very least, it could be worse. So I was just looking around at the AI coins, which have been just annihilated. List Veracity, which was up around 0.088 cents, down 99.91%. So at least we've maneuvered around that and stayed away from the AI coins, which I've been saying for a while. That there's no money there, and they can't compete with the for-profit AI companies. But just checking this out, I didn't realize that I had been talking about this for over a year, the USDT study, and I forget, I heard it mentioned somewhere else. I recreated a study somewhere and did a video on it all the way back here on November of 2024. So yeah, we've been seeing that play out before our eyes. And we it wasn't clear necessarily, but it's clearly playing out in that regard. So I was just updating this study here that I originally did end of January, and so let's take a quick look at it. I think it's important because, again, just to recap here, this fractal from over in the prior cycle, these blue lines there matched up. We overlaid it. I was hoping it wouldn't happen here, and then we got to this pattern. I'm like, well, this seems reasonable. Maybe, just maybe, we can do this and get up to new all-time highs, which was the plan, and that 150K to 200K path, which has not materialized for various reasons that Mike covered. And I think, at some point it will, but we need to have regulatory clarity, and as he said, the sidelined capital that's waiting on the sidelines, not because they want to, because they need that regulatory clarity before the pensions and big investment houses can come back in. But as far as now, we are firmly up in crypto crash zone. Now there is some resistance here. This is correlative but not causation, causative, I guess, because Tether doesn't drive the market. It's kind of, but these inverse relationships do exist. So since there was some resistance around this 8.25% here and there, we could see this pullback as this blue fractal suggests. And if I shorten it a bit, I've kept it exactly as the last cycle, but let's massage it a bit just to kind of make it fit a little bit better. So this would indicate that we could see some reprieve here and come back from this level, get a bit of bullish-ishness, and fool all of the degenerate day traders and margin traders to going long, and then they nuke the market again, and we really get up into this bear market range. And timing-wise, this would signal all the way out to, well, only March. So the, positive or negative, maybe it's just better to get this all over with sooner than later so we can get back to the real business of going higher. And, it's going to require a lot of liquidity. It's going to require Market Structure Bill and Clarity Act and, some easing of tensions in the Middle East and Russia and China. And so we are in the middle of history in the making, for sure. And ultimately, it'll resolve one way or the other. But I think there are real concerns right now with this Iran conflict and escalating tensions. And, an animal backed into a corner was going to be vicious and do whatever it needs to survive. And I think that's kind of what's spooking the markets right now. And we are going to head lower. So in the bear market zone, again, if we see a pullback, it would be a good time if you're still in positions to take some profits. I did want to note, because I was thinking about this morning, Mike and I, our job is not just sitting here in front of you guys during the hour. It's all day long. At least for me, I'm always thinking, and ideas are coming in and out. So because this is retire rich, these are the long-term noise. And certainly keeping in mind that Amazon lost 50% of its value a few times, up to 80 or 90% of its value in time. That doesn't mean that we want to have that or we want to ride it all the way down. And it's good to have a long-term view, but certainly it's a good idea also to de-risk. And we talk a lot more about that in the M3 Active Trader, which also I think may need to evolve into just M3 Swing Trader, because active trading is too difficult. The market makers, I'm convinced, are advanced AI algorithms, making it impossible, and if not very, very difficult for those shorter term swing trades. And the day traders, that's a whole different ball game. But we are actively looking into where we might have an edge. Some of you know this in the spread trader scalper, and I'll touch on that. It's not open right now. I just want to touch on that to give some hope, and not hopium, but as Mike said, copium. That's a good one I haven't heard before. So anyway, this is a roadmap to follow and give us some ideas. And it was an interesting comment Mike made about with more liquidity, this could go higher. On a percentage basis, though, I'm not sure. If we do get up here in this 10% range, that's probably a good contraindicator. It's time to be re-entering the market. So I'll go ahead and put that in here. Again, it's my job to watch this, not yours. But if you want to follow along on this, you can go to TradingView and just or Google Brett Fogel TradingView, because several of these studies have been playing out very nicely, and I'm getting a little bit of traction here in 22 views. This head and shoulders that we'll touch on today is not playing out as a head and shoulders, which in many ways might be good. I don't want to dwell too much on this, but on these studies, you can always go back and hit play and see if I was right. It removes all the fudge factor. And so in this case, it's been dropping down. The ones that have been getting, certainly that bull flag breakdown that we were watching the last couple weeks, and I was talking about all through this area, and I finally posted this on let's see, January 28th, indicating I think this bear flag is about to break down, and this one has played out almost exactly and even overshot that area, and at this point I think we're going down to the 52K range, right, probably. So you will see how that plays out. And of course, the Gaussian channel that we touched on last week, this is playing out as well. And this would signify we could go down to these 38K levels if it were a 60% retracement. And if it was only a 50% retracement like we saw back here, we're down in that 45K area. So bottom line is I would not be terribly bullish right now. If we get a bounce of any kind, it's a relief rally and a counter trend rally, and you want to be taking some profits if you have them. But certainly the privacy coins are getting obliterated, and unfortunately, we can't win them all. I was playing for a bounce in Bitcoin to get a nicer bounce in the privacy coins, and we didn't get one for reasons that I've already stated. Let's see, I'll open the chat here if anyone has any questions. I don't see any. So anyway, with that in mind, but yeah, it has been interesting, this tether dominance over time playing out kind of as expected. So